For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. Well, if you just finished watching the October 29th, 2016 webinar, then this is going to be a very familiar scenario for you. This is a Baltimore Chop 2 standard deviation opening gap. This is in COH Incorporated, and what I want to show you here is how those scenarios that we talked about in that webinar come to life each and every trading day. So if you haven't watched the webinar yet, you can still watch it. Go ahead and click on this link, and you can watch the thing start to finish. You'll see my presentation, Tim Bigham's presentation, and then you will know a little bit more about what I'm talking about here. But let's dig right into this one. Here we have COH Incorporated. We see we've got this move, this little wiggle down below the fourth bar of trading. That's at $37.62. That is an entry trigger. 37.63 is the low of the fourth bar, so 37.62 is the trigger to get in. 37.02 is going to be the initial profit target on this one. That's just based on the close of this first bar of trading, the low, and the open of the second bar of trading. A lot of price activity went on there. And then we've got 37.81 as a logical place to pull the plug if price trades up above there again. Because my best assumption here is that if it gets up above 37.81, it's going to go at least into these highs, if not shoot higher, right? Most of the time when it gets up above the previous high, it winds up breaking to the upside. And I definitely don't want to be part of that as I'm in a short sale. We see here that in bar number 6, this is 5-minute bar number 6 of the session. We're about 30 minutes into the trading day. We're wiggling around right up around that 37.81 stop. That's not a problem for me. If it goes and it hits that level, just take the trade off and move on to something else. Just worry about the next opening gap trade tomorrow. I mean, they're not all going to go in your favor, but when they do, they wind up being really good moves. Now, this still has potential. We see that it's running into some kind of overhead resistance there. And one of the reasons that we don't know precisely what's happening is I don't have volume by price plotted here yet. And that's because I want to take this and sort of show you the tools one at a time, the things that are relevant, the things that make it easier to trade these. And for right now, all we know is what's seen on a standard bar chart with price and volume. So we've got open, high, low, close, 5-minute bars, and we have a plot of volume. And even the plot of volume is a little bit better than standard, right? Because I'm showing whether or not it's buy or sell side volume. The green bars are buy side, and the red bars are sell side. Now, as far as trade management on this goes, very similar to how we trade the stocks on the trading plan. Once price gets 50% of the distance from our entry line to our target, we go ahead and move the stop to break even. Once we get 10 cents to the target, we move our stop to the 50% level, and we just keep ratcheting things down if price moves big in our favor so that we can capture more and more of the profit extensions. But let's just watch what happens here. We're not quite 50% of the distance to the target yet. And then I want to take a look at what volume by price could do for us in terms of refining this stuff just a little bit, just to tweak things so that we get a better understanding of what's going on. So here it is. Here is your volume by price chart. You can see I've added this histogram out to the side of the chart. What this shows me is where volume is building and how it's building relative to what's been happening over the course of the session. These bars are pretty fluid at the moment, so while they're happening, you're going to see them grow and contract. And then once a bar is finished, you'll see those bars become very stable and give you a really good read of sort of what happened during a bar as the bar was forming. Now, see our 37.02 target down here? That is below the significant volume bar of the spike to the upside. So I'm just going to adjust that higher a little bit to 37.06. And now as we're moving lower and we start thinking about trailing these stops, this 37.81 stop that we had placed on the trade at the outset is going to move lower, and that's because we're 50% of the distance of the target. So that's going to tell us to move the stop down to break even, and then as we get down to 10 cents to the target, we're going to move and pull the break even stop down to this level at the volume build. We know where break even is, so I'm just going to say 37.63 is the current stop. And then if we get down to $37.16, which it looks like we're going to in a second here, then what we're going to do is use that volume build level as our trail. So right now what we would have is a 50% to profit stop, and that would get us down to about $37.41 on that volume build. So it's a little bit richer than 50%, but I'm not going to put it exactly at 50% just because we've got that number up there, and if we're not going to break up through that volume, then it doesn't make sense to pull the plug just to save a couple pennies, right? I want to see what it does if it inflects there. Now, as we get closer and closer to the target, what we can also look at are some other tools and figure out how to get out. And I've got those open on another screen that I can't show you right now at the same time just because of the way that this stuff records, but I'll show you sort of after the fact. And what that's telling me is that closer to 37.30, 37.31 is probably going to be where we're going to pull the plug on this trade. That chart happens to be a 25 tick chart. That's something that Julie uses frequently when she's trailing stops. And if we get stopped out of this trade and we get reversed here before we hit the profit target, then I'll go and I'll show you what the logic for that was. And it looks like we're probably going to go up and hit that 37.30 level in a second here based on the 25 tick chart. And I'll show you how to read that chart and how to make heads or tails out of an exit based on non-time compression charting data. Okay, so we have got no position in COH. COH in the room today. Rick just called it as well. He exited COH at $37.31. And let me just show you what that 25 tick data shows us. So we use it like a stair-step progression, right? And if it breaks this level and it breaks this level to the upside, that's our signal to go. Rick got out right at $37.31 in the first hour trading pit. I got more like $37.34. But it's all based on some very solid logic, and it uses some tools that we use in a very predictable fashion. Everything's planned ahead of time. We know exactly what we're going to do, and that, to me, is the important part of how to trade these opening gaps. So there you go. That's sort of a soup to nuts trade in COH. I hope that makes some of the stuff from the webinar even clearer. As I said before, if you haven't watched it yet, you can go ahead and tune in. That is a replay recording, so you can watch that anytime and as often as you might like. If you have any other questions, please email me, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.